The Federal Reserve meets this Wednesday and Fed Chair Jerome Powell is in the hot seat. It appears the Fed is prepared to offer some interest rate relief, but the open question is what hints are on offer about what comes next. Rapidly deteriorating job growth has solidified support for a quarter-point interest rate adjustment among Fed officials. But with price pressures still elevated, some will be reluctant to indicate much more monetary easing from here. Your thoughts on this, Alistair, and what impact will an interest rate cut have on the price of gold?
Well, I think if you look at market expectations, I mean, this is the day before the FOMC meeting, before it starts. No, I think it starts today, actually. The expectations in the market are generally for a quarter-point cut, 0.25% cut. And there are some expectations that it may be as much as a half. These expectations are being fueled by political pressures from President Trump and also signs that unemployment is increasing and therefore we are going into some sort of recession. On that basis, the hope is that the Fed will switch its mandate somewhat from following inflation, trying to control inflation, to try and control the level of employment. The problem with all this is that next year we are likely to see a resurgence of what they call inflation, but I prefer to call a loss of purchasing power of the dollar. And I think that any cut now will probably have to be reversed very, very quickly, unless, of course, the Fed is prepared to see a far lower dollar.